Short-term rental loophole is one of my absolute favorite tax loopholes when it comes to real estate because it can work for virtually anyone. And what that does is the short-term rental loophole basically says you could be someone who either has a day job or runs a business, and you can continue doing that. Okay. We don't have to change what you do on a day to day basis. You can invest in short term rental properties as a side hustle and potentially be able to use those rental tax benefits to offset not just rental income, but all of your income. And if you're married, you have a spouse, it can also offset income from your spouse as well. So that's what I love about it. It works for anyone, doctors, other accountants. We have clients who are other accountants who utilize it. Just somebody high W-2 working in tech, all kinds of people can utilize it. And the short-term rental loophole is just much more achievable for virtually anyone. So, a short term rental property for tax purposes is any property where the average guest stay is 7 days or less. So, just because you list something on Airbnb does not mean automatically it's a short term rental. The other definition, really important to understand, is in order to use the loophole, you have to meet what we call material participation hour requirements. And that there's a couple ways to meet it. The most common one we see is 500 hours. So, meaning you and if you're married, a spouse, okay, combined, if you can earn at least 500 hours with respect to managing your short-term rental property, then you can use short-term rental losses against all types of income.
I'm like, "The money is in your taxes. Let me help you. Let me help you." And they don't
Yeah.
realize that, some investors were using this tax strategy or various tax strategies to actually help fund future investments.
Yeah, for sure. We have, I know you mentioned earlier to share a client example. So
Yes.
we have a client example. It's actually two physicians married to each other. Their income is over $600,000. Very significant amount of income. And so for them, it was going from just W-2 income where there was virtually no write-offs besides 401k contributions at work. They bought two short-term rentals, single family, nothing super crazy. Takes about four or $500,000 each. And in that first year alone, their paper write-off just on, building and furnishing and all that was close to $300,000. And that's just, two small STRs. Instead of paying taxes on 600,000, they're paying taxes on 300,000.